This slide should be familiar to us because, we've had the same strategy since we started 16 years ago at the beginning of 1997. And our whole philosophy is to generate cash flow, to grow that cash flow, and then to distribute it to our shareholders and unit holders. We try to focus on stable fee-based assets. We believe we're the market leader in each one of our 5 business segments. We're pretty much spot on in controlling costs. Those of you who went to the elegant dinner last night at Papa's can attest to that. As I said last night, for those of you who haven't been coming all these years, we used to give out chits, 2 to a person for 2 beers. We've since relaxed some over the years as we've gotten bigger, and you now have as much beer or glasses of wine as you want. But we really do believe in controlling costs. You don't see any corporate jets or sports stadiums named after us or anything like that. The next point is just so paramount that you just can't overemphasize it. The asset footprint that we have now is just unbelievable. This may seem immodest to say, and I give all the credit to the Kinder Morgan team, but there's never been a package of midstream assets assembled in North America like we have today. 75,000 miles of pipeline, now another 6,000 with Copano, and over 180 terminals spanning all of the United States and Western Canada. This is just an unparalleled footprint, and the ability that gives us to ratchet in new acquisitions, new extensions, is just incredible. And in fact, if I look back a year ago, we thought that post El Paso that we would have tremendous opportunities to exploit this footprint. In point of fact, it's been significantly better than I thought it would be. Obviously, we believe in a strong balance sheet. We've accessed the capital markets for over $30 billion since we started Kinder Morgan. And then as I think, and we've been investment grade since the start at KMP, and I think if you look at what we're sharing with you today and what we share with you every quarter and what we put on our website, if there's a more transparent company in the Fortune 500 or S&P 500, I don't know who it would be. If you look back at the inception of the Kinder Morgan family of companies, which happened when Bill Morgan and I acquired the general partner of the old Enron Liquids pipeline at the beginning of 1997. At that time, the combined enterprise value, debt and equity, was a little less than $350 million. Today it's $105 billion, 16 years later. At that point in time, in 1996, the assets we acquired had earnings before DD&A of $36 million. Today, in 2013, we anticipate we'll have a little over $7 billion of earnings before DD&A. The KMP, looking at that, a standalone basis, it distributed a whopping $17 million in 1996. This year it will distribute right at $3.8 billion. If you look at distributions per unit on a split-adjusted basis, back in 96 we were paying out 63 cents a unit. We're paying out $5.28 this year. Total assets $304 million versus $68 billion today. Employees less than 200 and right around 11,000 today. And clearly we are an S&P 500 member. Now, turning to the next slide, this is really what makes the whole thing work, and it's the unparalleled asset footprint. We're now the 3rd largest energy company in North America in terms of enterprise value. We have the largest natural gas network in America. We connect to every important shale play, and you've heard me say this before, and I said it last night. I am absolutely convinced that natural gas is the future play for America in so many different respects. Whether you're looking at reducing emissions, whether you're looking at quote-unquote energy independence, whether you're looking at foreign currency issues, foreign exchange issues, everything points to developing our natural gas assets. The biggest single handicap to that development is making certain that we have adequate infrastructure to serve the additional supply that's coming online and connect it to the additional demand. So when you see the uptick in demand for things like electric generation, for instance, on our Southern Natural Gas, our SNG facilities last year, we had 42% increase in gas demand for electric generation in the southeastern United States. Now, that will not continue at that level, but we've seen huge increases in the use of natural gas for electric generation. We're seeing increasing use for industrial, for chemical use, and it's particularly along the Gulf Coast. And all of this requires more infrastructure, and that's what we're here to provide. We have a great deal of it, and we will continue to expand and grow with the market. We're the largest independent transporter of petroleum products. I don't see a lot of growth on the volume side there. I think we probably saw our peak refined products demand earlier this decade, but certainly we have a number of new projects, and when Tom Bannigan and Ron McLean talk later, you see actually the growth from 12 to 13 in that segment is pretty darn good. We're the largest transporter of CO2 in the United States. We move about 1.3 billion cubic feet a day. Lots of opportunities for growth there on producing more CO2 and getting it to the market, primarily in the Permian Basin, although eventually to other places. We are expanding our presence in our ability to produce and move that CO2. We're the second largest oil producer in Texas. That's the one area where we have some commodity exposure, but we hedge the vast majority of it over an extended 5-year period. We're the largest independent terminal operator in America. We own an interest in or operate over 180 terminals. We have 112 million barrels of domestic liquids capacity, including about 26 million barrels right in our Pasadena Galena Park terminal here on the Houston Ship Channel. That is the largest products terminal in the world. And then finally, in Canada, we're the only pipeline that can move oil sands crude to the West Coast. And today we move 300,000 barrels a day. Our application is in, and we have binding commitments from 13 different shippers to increase that to 890,000 barrels a day. Virtually all those commitments, 710,000 barrels a day of commitments, are for 20 years. So a very nice long-term play there, assuming we get final NEB approval, and Ian Anderson will talk more about that. We'd like to provide you with a lot of opportunities to invest and also be as confusing as possible, as this chart is. But this shows you the Kinder Morgan family of companies. And again, Kinder Morgan, Inc., with an enterprise value of about $52 billion, is the ultimate parent. We have, as I said, a little over 1 billion shares outstanding. 64% of that is the public float. 29% is myself and other management and a couple of board members. And then 7% is still held by one of the sponsors, Highstar. All the other sponsors have completely sold their shares and are out of the picture and off the board. Then we have the two publicly traded entities below that, Kinder Morgan Energy Partners, which has an enterprise value of about $48 billion, and EPB, El Paso Pipeline Partners, with an enterprise value of about $13 billion. But the main interest of KMI is that they have the ability to take the LP distributions and the GP distributions, and that works into the ability to declare a dividend this year for 2013, we believe, of about $1.57, and we anticipate $5.28 in declared distributions at KMP and $2.55 in declared distributions at EPB, all very nice growth rates from the level of 2012. And I'll talk on the closing slide of my presentation of what we look at for longer-term growth. We've had very good, consistent growth. Looking back at KMP in the years we've had it, we've grown the total distributions, that's the GP and the LP, by 38% from 1996 through this year. If you look at it on an LP distribution basis, we've grown it at 13%. And importantly, we haven't levered up the balance sheet. As you can see, we have been around that 3.5 to 3.7 range in terms of net debt to EBITDA since the very formation of KMP, and have been investment grade the whole time. This has led to significant historical returns. Every year I say, certainly past performance is no guarantee of future performance. It does maybe give a management team or a company a little more credibility to deliver this kind of results over the years. And the return at KMP has been 24% per year since 1996. KMR, since it started in 2001, has been a 15% compound annual total return, and KMI, since it went back public, has been 13%. So we've had a very nice return, and these returns went through year-end 2012. We've had some nice uptick since then. So again, we've had good historical returns, and we look forward to providing them in the future. This is a real simple story. If you look at KMI, if you believe, as we do, that we can grow it at 12%, maybe long-term 10%, and you can grow at that level and have a 3.5 or 4% yield, you've got what we think is a very attractive proposition. If you believe at KMP that you can grow it at 6 or 7% and add to that a yield of 5.5 or 6%, you've got a very nice story when you combine the yield and the growth. Promises made, promises kept. We've been having these functions since 2000, and every year we have put out on the web exactly what we expected to do in terms of the KMP budget distribution. We have met or exceeded that target every year except one where we missed by a robust 2 cents. At KMI, we've just had 2 years, but in 2011 on the road show, Park and I and Kim promised you $1.16 for 2011. We delivered $1.20. At the beginning of 2012, we promised $1.35. We delivered $1.40. Helped, of course, by the El Paso acquisition that occurred in May of 2012. And then on EPB in 2012, the forecast was $2.25 once we took charge of it, and that's exactly what we delivered. If you look at the budget guidance for 2013, I think this is a very interesting slide. The first pie chart at the top is the KMI budget. And if you look at the KMI on an integrated basis source of cash, you see we expect to distribute $1.57. That's a little over 12% growth versus 2012. And 54% of that is coming from our natural gas pipelines. 14% is now from our CO2 oil production, and you can see the rest of the breakdown. But we have leveraged ourselves more and more to the natural gas side of the equation. That's largely a result of El Paso. Clearly, this does not include any Copano numbers. That will take that natural gas area up even higher. Then if you look at KMP, where we're forecasting $5.28 per unit declared distribution, 6% growth from 2012. That's 40% natural gas today, and pretty evenly split with the rest of it between our CO2 operations, our terminals, and our products pipelines. If you look at EPB's budget, of course, it's 100% natural gas, virtually all under long-term contracts. Included in that natural gas is long-term LNG contracts at our 2 LNG facilities, and we see a lot of growth in that area in the future, including an announcement that we made earlier this week that Tom Martin will talk more about on an LNG liquefaction facility at our Elba terminal in a joint venture with Shell. And I will just say up front, there's been a lot of confusion on that, but the first phase of that is not contingent on non-FTA. It is FTA only, so it is a viable project that will happen, at least in the first phase, and Tom will take you through more of that. If you look at 2013 in terms of growth drivers, we have a lot of growth drivers in all 5 of our business segments. Certainly in natural gas pipelines, we'll have a full year of El Paso. We've got a number of expansions. We have these drop-downs I talked about, and we have cost savings that are not only more than we expected, but will ratchet up modestly from this point forward over the next couple of years. Products pipelines, we don't see much in terms of volume growth on most of our systems. We do on a couple of systems, but we see a full year of our Kinder Morgan crude and condensate line coming out of the Eagle Ford, some new biofuels projects coming online, our Cochin EP service, that the deal we struck with Nova and Imperial, that is a real plus in terms of volumes and revenues there. We also expect improved margins on our Transmix facility. We will have another FERC index adjustment. It will be less than we've had in prior years, but still significant. And we will have partial in-year service of our Parkway. That's our new, it has 100,000 barrels a day throughput right now under a commitment that we have, but it's expandable up to 200,000 barrels a day, and that's a joint venture with Valero running from Louisiana up to southern Mississippi. Terminals, still coal projects coming online. This is almost entirely export coal. Our Edmonton crude tankage, we just announced another expansion of that. So we've had really 3 expansions since we put that terminal up. Our big Bosco facility on the ship channel, which will handle mostly black oil now, but is going to be a facility that also can be used as refiners in the Houston ship channel want to export products. That's going to continue to progress during the year. We're going to have some increase in contracted rates, and then we're going to have a full year of impact of some of our 2012 acquisitions. On the CO2 side, we're having good results in our oil production and our NGL production, particularly at SACROC. Our hedge price is a little better than it was last year, and so far, even taking into account some of the discombobulation in the Midland Cushing spread, we look like we're right on target on the forward curve for 2013 from a commodity standpoint to be on target in our CO2 operations. Kinder Morgan Canada essentially flat with 2012, which was a very nice uptick from 2011 and prior years. The big emphasis there is developing the big project, which is the expansion from 300,000 barrels a day to 890,000 barrels a day. We're before the NEB with the first phase of the approval process now. Certainly it will not be without controversy. It is so critical to the economic future of Canada in terms of moving its largest single resource base, its oil sands production, to Asia, that I would be shocked if in the end the project is not approved. But we do have to go through the approval process. If we do, it's a very solid project. Our customers are committed. Again, of the 710,000 barrels in commitments, all but 43,000 barrels, or 93% of it is 20-year contracts. The other 7%, or 43,000 barrels, is 15-year contracts. So it'll be a very good project for us. Now, a lot of you look at backlog of growth projects, and so we put this slide together for you. This will change, and before the end of the year, we will add projects to this, I'm sure. But right now, and Steve will go into more detail, but as you can see, it puts to over $12.5 billion, and these are projects that we expect to build over the next 5 years. And most of this is coming as a result of the tremendous footprint that we have across North America. It's probably equally important to see what's not in that backlog. What's not included is further LNG liquefaction build-out beyond this initial phase. So to the extent we can capture some non-FTA at either Elba or our Gulf LNG, that's additive to this. It does not take into account the EPNG oil conversion, the Freedom Pipeline. I think Tom's going to talk about that some today. That's a $2 billion plus project that would simply reverse and convert some of our natural gas lines to crude oil to move Permian oil, which is selling at depressed prices, to the West Coast, the LA refiners, where they are paying excessive prices for their crude oil feedstock because they're importing it from various places overseas, including Alaska, the North Slope of Alaska. That does not include that. We think that's got a pretty good likelihood of success. Again, as we always say at Kinder Morgan, we won't build it unless we have commitments, and we're working on getting those commitments now, but it's an exciting project. It also does not include additional expansion of natural gas supply into Mexico. This is a tremendous market. We're better positioned than anybody else to drive additional supply to the border. We're not particularly interested in investing on the Mexico side of the border, but we're very interested in expanding our systems north of the border to get more natural gas to the Mexico pipelines that connect at the border. We're doing our Cerrita project right now for EPNG, but if you visualize EPNG, it's a gigantic series of pipes running from western Texas all the way across into Southern California, and we have capacity that we can utilize, particularly on the southern line. I mean, you just think of a series of straws that are dropping that off to interconnect points all the way from El Paso all the way across to through New Mexico and Arizona to drop off additional supply. And then on top of that, in our Texas intrastates, we already have our Monterey pipeline. We expect we'll be able to expand that. That expansion is not in here. So a lot of opportunities with regard to delivering natural gas to Mexico. Also not in here is various other expansion and conversion opportunities as we look across at our whole system. The drop downs from KMI are not in here. That's significant, as you'll see when we look at it on a segment by segment basis. And then obviously this does not include the upside from any acquisitions. And as I said, Copano alone will provide us with $1 billion in identified acquisitions. I think that number will grow as we get deeper into the Copano operations. So all in all, I think from the standpoint of backlog and the growth for the future, it's a very good picture at the Kinder Morgan companies. Now let me talk about long-term growth rates, because this is a question we get a lot. And let me go back a couple years. When we did our roadshow to take KMI public, we said at that time that, look, you can't estimate things perfectly, but we're going to give you the 5 and 10 story. We said, and this was pre-El Paso, it was in February of 2011, and we said, look, we think that for the next few years, we can grow KMP at 5%, and if we can grow KMP at 5%, we can grow KMI at 10%. Those would be our growth rates. Then El Paso came around, and I use the analogy, we've got a big pig going through a boa constrictor. Some people don't like that analogy, but that's okay. And I said we can ramp it up from 5 and 10 to 7 and 12. So what we said is we were very specific that using 2011 as the base year, going out to 2015, you could expect these growth targets: 7% at KMP, 9% at EPB, and as a result of that, 12% at KMI. We still stand by that. We're on track to do that. So if you look at from 11 to 15, we expect to meet those targets, the 7 and 12% targets that we're talking about. Now, people ask us, well, okay, but 2015 is now not that far away. What are you going to do for us after 2015? So it's very hard. The visibility is less accurate the further out you get, but we've tried to look out the next 3 to 5 years. So get out beyond when all the drop downs of El Paso assets are done. Where do we go? And I think as we look further out, it's not inconsistent with what we said on the roadshow all those months ago, and that is I think we can grow KMP in the 5 to 6 range, so a little bit better than that 5% we talked about in the roadshow. I think we can grow EPB in the 5 to 6% range, and I think that will lead to growth at KMI in the 9 to 10% per year range. So hopefully that'll be some help to you when you look at what's going to happen to the Kinder Morgan companies as you get beyond 2015.